All right, everyone, welcome to another Tuesday night class. So tonight's topic, as you guys may have already seen, it's going to be about finding plays without emotions. When I talk about this with a lot of people one-on-one or even like family, friends, a lot of people are so stuck on financial success, the money that comes with trading, which I totally understand. But one thing that you guys may learn, or if you haven't already learned as you've been going through the years or months or 5+ years of work with stocks and just learning how to do this stuff, money is not really why us top traders, I don't want to put myself up there, but with my experience and just my knowledge, we don't trade for the money. We understand the money comes with everything we do, but end of the day, literally we're playing what you see on my screen right now. We're playing a chart, we're playing candlesticks, and I completely understand why people are saying, like, teach me how to make money, teach me how to like get financial freedom. And I totally understand that. But when you really break down how to get to that point in trading with the lifestyle or even just the journey of it all, what you see is literally how we do it. No one just trades blindly that has multi-millions. I don't have that yet, but I'm just saying people that are extremely successful, they don't just make money throwing in money for, well, throwing in on positions, hoping for like the big results, hoping to get money out of what they're doing. They literally are using what they see, putting that into their perspective of a proper risk to reward, and they're going off like a literal logical standpoint. There's no hope with a lot of people. If they leave runners after trimming, that's when the whole idea of if it keeps running, I'll make more money. That's the biggest purpose of it. So I hope you guys really like are active, ask questions throughout this, because I honestly feel like for me, trying to learn how to trade without emotions, how to find plays and not have that like hope perspective, like, oh, if I enter here, this could bounce another 5 points. If I'm right, like I can make 500% gains on the week of contracts. And I totally understand that. But you need to really try and wrap your head around the fact that when you play from a logical standpoint, the idea of how much do I want to size? If I oversize on this position, will I have an emotional like thought as this trade moves up and down? Am I looking at my P&L because I oversized to the point where if I'm wrong, my whole portfolio is going to get destroyed off of this? But if I am right, my whole portfolio will make a huge dramatic change that could lead me to that quote unquote financial freedom, possibly not having to work a 9 to 5 again in my life. Understand the journey with this. What you do now is going to repeat for the next however many years you do this. For me, obviously, the rest of my life, and I'm hoping the same for you guys. Whether you've been losing for the past however many years or you've been winning for the past however many months or weeks or however long it's been, what you do now is literally going to keep repeating, sizing properly, understanding why you're entering a specific setup or charting system that you wait for because you know based off your historical trades, the outcome, that is what's going to make you successful. Many people are going to use the excuse of, I don't have time to wait. I want to make money now. Those people aren't doing it for the right reason. I truly love trading. I could lose every day for a week straight, a month straight, proper sizing, obviously, because I understand if I lose, it can't be oversizing my portfolio. I enjoy losing because it's a part of my plan. I prepare for it. That's how I enter all these trades. That's how I have losses and I'm still showing up every day, because when you enter proper and you're finding a trade without having that emotional standpoint, you're not looking at the money. You're literally looking at the fact, okay, if the chart has the same setup like it did when I did this, say, a week ago, I know the risk, but I also know the potential reward that will come with this if I'm correct. That is when like cutting out emotions comes into play, sizing correctly, understanding you're not trading for the money. The money's a byproduct. If you're only looking at the financial standpoint, you're going to oversize when you're down on the week. You want to make back those losses to end the week green. So many people don't really, and sorry if I keep looking back, I have the chat behind me on that TV, but I really hope people start to really understand everything that you do with trading. Money is not the I'm entering because of money, I'm selling because of money. When you look at it from a chart perspective, which is very hard to do, it takes so much discipline. And there's a lot of people that message me and ask, like, how can I make this more realistic? How can I overcome that hump of like I feel the success, but I'm just not getting to the point of where it's so consistent that it just happens. I tell them, send me a chart that you're looking at. Send me your levels with the chart. Don't just send me a chart. And I'm actually going to delete everything on PayPal right now. Don't just send me a chart that you see on my screen right now and just say, what do you think looks good on this? I want to see what other people are interpreting when they look at something like this. For a newer trader, it's like a foreign language, and I totally understand that. I used to be the same way. I'd see how, like in current times, PayPal's pushing, I got to get in before it's too late. What are you really getting into, and what could happen if you size in and we drop? Are you scared? Are you worried about the money you're going to lose? There's always a reasoning behind why you're entering, whether it's the chart or the idea of, I don't want to miss out. And I really want to help you guys get to the point where you're not buying in because of FOMO. You're not buying in because, oh, I missed my initial entry and I just want to get in before it's too late. Every trade that breaks out has another entry point that will save you a headache. Every trade that you sell for a small win that keeps running, don't chase what you should be holding on to still. A lot of people get tied up in, like, I oversized, I have to get out at 20% because I just don't want to risk it going back to break even. You have to comprehend the fact that if you repeat that 20% gain every time, one major loss is going to wipe out, say, 3 to 4 gains. So having emotions cut out the picture puts you into that successful journey 1 foot at a time. It's not going to happen overnight. No one sizes light and makes $1 million. As you grow with this, that's when everything slowly starts to align. So looking at PayPal, the first thing I want to mention, and I'm going off the topics, I have my phone here just so I don't fall off track like I usually do, trusting zones and waiting. Looking at PayPal, the biggest thing that I feel like everyone should realize, before the major sell-off, we had all this consolidation, all this chop, we were in a zone. Understanding why we held at the bottom is very important when taking this into consideration for the current price action we're slowly moving up to. Many people, when they're stuck on, I can't change the time frames or nothing. When people are stuck on this whole idea right here that we're looking at, you see green pushing up. Imagine this yellow highlight's not there. People see, okay, we had this little double top here. We broke out on the upside. I got to buy in. Where is the chart going to? Like, what is your initial thought when looking at this? Like, what's your plan? What do you hope to make out of this that's not going to have you in shambles if it does go against you? I'm always focused on like a level system, level 1, level 2, or like most people will say PT, price target. Where are you looking at this to go to? When looking at this heavy consolidation, this was a heavy support zone with price action, and we're currently below that zone. Using logic, using probability, using like historical processing of technical analysis, you understand, and you should understand at least, okay, historically, this has held support. We're coming back up now as resistance. If we fly through this, we're going to have a lot of indecisive price action that may not just send like what happened back here. This push, this gap up, it could have been earnings. I can't see that stuff, obviously, but this type of move is not going to happen 100% of the time in a move that's happening currently. Like, we could push up heavy, we could gap up, we could send to $75, but you have to look at this from, what can I do to not have emotions if I enter or if I'm looking at a trade? Understanding where PayPal has came from to get to where it is should give you more of a conviction as to not chasing, understanding, okay, I may have missed the initial move. Let's see what happens as it pushes higher. You're not really chasing the setup. You're not really focused on, and I see Rob said resistance. That's literally perfect. I know I already said it, but I'm peeping back and forth as people type. As you're approaching this, logically, you understand there is going to be rejections as we approach this yellow highlight. It's not to the decimal. I tell you guys this a lot. Don't chart like a zone based off 71.72, 71.35. Focus on the area. There's no such thing as a dead point reject. Yes, they happen, but you're not focused on a dead level for a larger time frame. You're focused on the area of rejections that may have been a support historically. It's going to play a part in current price action. When I tell people this, it's like, well, how do you know it's going to reject? I tell them to zoom out. If a level has held historically and we're underneath that level now, pushing back to the upside, logically from a standpoint, use the reversal idea. Support flips the resistance. We're going to reject naturally. It's not a guarantee, but it limits your idea of chasing calls and possibly getting caught up in chop consolidation. The premium will get destroyed even though it's looking strong on the smaller time frames. I bring this up only because I never looked at the larger time frames. I would only focus on, and I'm going to zoom back in on the smaller time frames for PayPal. I see this curl. Ignore, once again, this yellow highlight. I'm taking you back to how I used to be 3-4 years ago. I would see a stock pushing. I basically didn't understand what the heck this was, trend lines, higher lows, higher highs, whatever you want to call it. I would blindly enter because, oh my gosh, this looks so strong the last 2 days, I have to get in. Not realizing, okay, what if we don't push? Where would a nice entry be if we have a pullback? Where is a level that we've crossed historically that may pull back and act as, okay, we broke this quote unquote resistance. Now we're going to pull back and test it as support. As I've grown to love stocks for the journey and not the money standpoint, I've come to the terms of, I want to wait and see if this stock actually broke out of this level or if it's just a fake out and we're going to come right back down. So when I'm looking at stocks like how PayPal's set up right now, I am waiting to see, and this is just how I am. If you're not this type of a trader, that's fine, but I'm giving you my perspective. I'm never going to teach what I don't use or what I don't do. I'm not going to tell you buy the breakout because I don't do that. If that's who you are, you understand the risk. And if you don't understand the risk, you need to learn that before just doing what you see other traders do. When I see a breakout, I want to see a recontest to the zone that was not able to break out the first time, the second time. Now we broke out. Okay, if we really broke out of a resistance, this should hold as support if we pull back. And if it does hold, I'm entering back at the historical resistance, which is now flipping to support. That is where my patience comes in. If PayPal keeps running, why would I be freaking out when I understand on a larger picture, there's going to be chop? Do I really want to risk another dollar or so push on the stock price when it could pull back $1? That's a 1-to-1 risk going off share price movement. I'm not concerned about the contracts, the premiums, the possible money I can make. I'm focused on just the chart, not even thinking about the potential of this going higher. When I understand this could push $1 on the upside, we're going to hit resistance, or we could drop $1, we're going to hit support. From a call perspective, do you want to buy in the middle now that you see it from how I am explaining it? Do you want to buy and risk this entry when this is literally in this dead center of this zone? Heavy resistance, heavy support based off price action. A lot of people don't see it that way because, oh, I got to get in before it's too late. If this keeps going, I'll make a huge return. If this pushes higher, my contracts are going to print. I guarantee you so many people that are playing PayPal, they bought in before the breakout. They're holding runners, possibly a whole position, still wanting more. They deserve to hold that because they got in before retail catches their eye. I don't know how much people are looking at this now, but if you were looking at it a few days ago, that was the time to watch PayPal. Going off the trend I drew, you can easily determine higher lows are forming on PayPal. We had a massive sell-off. I understand that it's scary from a broad perspective of a visual on the smaller time frame. This will scare so many people. But when you think about it from an algo perspective, buying the dip, understanding lower risk, higher reward based on call premiums, you will wait for the form of a bullish trend. Yes, we broke bearish. Now look at the gap fill. We're pushing to a resistance. Do you want to buy it way up here when you missed your chance at the first curl? Now the second curl. Do you really want to buy at the break? Do you trust it to push? Or do you trust the zones and you want to put your probability in your favor? That's when this whole concept comes into play. Is that what should happen with SPY? So I will get to SPY. I don't want to speak on a chart just with how I know what charts look like without looking. I've been doing this so long. I just have that photographic memory. I can speak on levels, but I don't want to talk about SPY until I pull it up for you guys. We are going to talk about SPY because CPI tomorrow, I have some crazy ideas that could happen, and I will share that with you guys. It's probably going to be wrong. It's probably going to be right. That's why it's called an idea. I'm not saying this is going to happen. I'm prepared either way, but I will show you what I think could happen. Going off PayPal, and I'm seeing you guys are being, Rob is being interactive. I hope you guys can follow suit and just type stuff. Like as I'm talking, yes, I may not be looking at the chat nonstop, but understand I'm seeing who's interactive, who's putting the effort in. I know who's doing that. If you're here just to listen, that's perfect. And I hope you're learning based off that. PayPal has had to move. I completely understand the idea of I want to get in. Like it's been moving, it's going to keep going. I get it. Can you afford the risk that you're putting yourself in? You have money in the bank. And this is totally off like charts, trading. Think about the money in your bank account. If you have no money in the bank, that's fine. Just imagine you have, say, $5,000 or however much you may have. Are you just going to go spend that because you have it? All the bills are paid. I got food in the fridge. My kids are good. Family's good, whatever it may be. I got an extra 5,000. I'm just going to go spend it because I can. You have money in your trading account. Are you really just going to enter a trade because, oh, I haven't made a trade today. I'm bored. I'm just going to enter because this looks very strong. Look at the bigger picture. Preserve the money and wait for a better setup. You missed. I don't want to say the bottom here is an entry point. This is a very high, like I'm going to guess for a bottom on PayPal and ride this up. I start to consider buying points after the first trend is formed. I'm not saying the first actual bottom, but once this first trend hits and we push, you have an idea as to what a trend line can form. Yes, this can come up. Yes, it can come down. That's the risk that's coming with it. You're following price action. You're following a chart. You're not forcing trades because, oh, I'm bored. Oh, I missed the breakout. I got to get in before it's too late. There's hundreds of other stocks, and you're putting yourself in an emotional situation that I don't think anyone deserves. I mean, you're here to learn. Why are you doing this kind of stuff? I would literally blow accounts chasing. After I sell for a loss, after I hold the zero because I didn't want to sell for a loss, my ego was too big. I would look back on the chart and just laugh, cry or laugh, whatever it may be, because I knew after selling, I messed up. And I don't want you guys to think that way or be in that situation. I'm here to speed up your process and take those losses away. When you chase something like this, I get it. It can keep going. You're going to be emotional if this pulls back even, let's say, to this highlight right here, a slight 50-cent pullback. That's going to kill your premium if you're playing week of, a week out, a month out. At that point, your only explanation to hold is, oh, well, we have a heavy support underneath. I'll see if it pulls back and holds. And if it doesn't hold, I'll sell. Why not wait and enter at that level? Wait for a pullback. If we push up to this resistance, guess what? Say we break out, catch the pullback. If we're back in the zone, this resistance is going to flip the support and it should hold if that level truly means what it does historically. Everyone, I'm seeing what you guys are saying now. Hang on, my bad. Do you never full port? So you're saying we full port when it comes back to 68? I will never say full port. I know you're joking, obviously. SP. I know you like the joke. I know who you are at this point. Full porting is fine if you understand the risk. If you're wrong, you got $0. If you're down 20%, you're freaking out. You want to sell before you blow the rest of the account. It bounces up to 50% gains. Whenever I used to size heavy, I would freak out down 30%. But when I size light, I'm down 90% laughing because, oh, I sized for zero. I can afford this. When you don't put yourself in a stable mindset in a position, I don't care about the money situation, just the chart pulling back. You realize after entering, I messed up and I don't know why I entered. A lot of people, they average down. Oh, we're at the support. I'm going to average down. You're not averaging down, and this is your new position where this arrow is pointing. Your new position, if you bought on the top and average down, is going to be in the midsection of this move. And that's one thing that I came to terms with. Do I want to average down, or do I just want to wait and execute with proper low management on emotions and the idea of this has to work based off price action? If it doesn't, I'm not selling because I'm wrong. I'm selling because the chart just did not work out. Every trade you do based off a plan and you sell for a loss is not really a loss. And when I tell people that, they are like, well, I lost money though. Okay, well, you're trading for the money. You deserve to lose. If you size and play the chart and you have a plan. Everything's figured out. I could lose this much, but I could also make this much if the zones fill, if the chart works out. I'm prepared either way. If you sell for quote unquote, you wanted to sell for a 40% loss, that was the plan. You stuck to a plan. I consider that a successful trade. If you held down longer, say 60% loss, and you sold for 70%, you go back and say, man, I should have sold at 40. I held longer. I messed up. That is a failed trade in my eyes. So when I help people, I make sure they understand if you have a plan, if you understand zones like where you know you should fill, you missed the breakout like you initially wanted, don't chase it now, wait for a pullback. If you execute that properly, how are you losing when you waited for the move to happen? You didn't chase it. You didn't fall out of your emotional standpoint of, I will never chase FOMO again. I will never chase a play. People do that. It's human nature. I get it. As you grow, you're not focused on, oh, I missed out. Oh, I didn't hold the whole play. Our job is to last in the market. That's literally the whole point of retail. We're never going to outdo the big boys. It's literally impossible. They control everything. We're playing off their moves. So we have to take that into consideration from an emotional standpoint. Assuming we break through the major resistance above, would you wait and enter during the retest? How can you chart the right TP levels? So I know I briefly explained that, but I will go back in more depth and basically talk on that. So if we do break on the upside, obviously you guys understand what I would use. Since we broke out of this red highlight, I want to pull back to this now support, which was a resistance. A double top was rejecting. Yes, it's slightly lower. I understand that. But the pullback off the double held trends. Break up, pull back, that's main entry for support. If we break on the yellow highlight, this is when it gets kind of difficult for a lot of people, because for me, I don't want to buy in the yellow. I don't want to buy when it breaks above the yellow. I'm focused on pinpoints. I want the best possible execution. I use my own little style of looking at the contract chart, seeing how much the contract could be if we pull back. So I'm prepared to actually like set a limit well below the current contract price to fill if the chart hits a certain zone. I calculate with the Greeks, I do the mathematics on it, but using TPs, using levels, you got to find a center point. There's never like, oh, this is the price target. You can sell a contract in green whenever you want. I personally don't like doing that, because if I sell too early based off I was up 50%, now I'm down 30%, I'm just going to get out in case it goes back to break even. And then I look at it, say an hour or so later, it's up 100%. And it's at the initial level I wanted to sell at. I only look at the chart. I enter at a point where if I'm wrong right away, and I realize it. I'm not holding in the red because, oh, a level hasn't hit yet. It's still holding above a zone. I'm entering at the zone. So when we break above back inside this channel, and I'm going to highlight this just so you guys can kind of get a visual as to how I look at this from like my own perspective, I guess you can say. We break inside the zone. Instantly, my main thought process is, where is the first rejection we're having as we push up? Going off this consolidation, you can find levels within. I completely understand that, but there's never like, if I give some of my levels in this consolidation, their levels are not going to be the same, because everyone sees a different side of a pattern, of an exact level pinpoint. That's why I like to use zones, because it gives you an idea. I can't touch it until we show the strength, or we could reject. I don't have to scroll back now, because when I see yellow here on the smaller time frame, I will not buy calls in the yellow, because I know already that's a rejection. Historically support, now rejection. When I do TPs, I love to look at in between what people don't tend to really focus on. They're focused on, oh, if we get back inside, we're going to push the top and we're going to hit this TP way up here. Okay, I get that. But like I was saying earlier, we have all this consolidation, so much stagnant, all this compression. Price action didn't know what to do. Do you really think if we break back inside this, we're going to skyrocket out of nowhere? If there's volume, if there's buyers, yes. But from a logical standpoint, that is not going to happen. So you have to have, okay, there's a level here that could reject. There's a level here. This is when I break it down into, I need to put actual lines and have an idea as we push upside. This level here, I just put. I'm going to delete this support level just for now, so I don't confuse you guys too much. And I'm going to change this color to, let's go red. So the reason I put this level here, heavy bounce. I understand wick. Everyone's always like, well, how is it a level if we wick below? Do you not understand wicks happen because people put stop losses at the level I put? When we have a wick, market makers buy up the dip. Every retail gets wicked out. They switch the puts because, oh, we're breaking the level. We have to switch the puts. Shoots it right back up. All of this consolidation does not matter to me. I'm focused on the little stuff. If you want to use this level, be my guest, but this was straight up, down, literally like 1 to 2 days, it dropped back up, heavy push right back down. This is all indecisive. It's too much compression for me. I can't make out a level. I can't make out like what could happen if something correlates with the price action. If you want to use the bottom part, you can, because it correlates with the double bottom back here. But when using just this yellow line, I'm focused on consolidation holding value. Okay, we wicked below here, shot right back up. When we pulled back down again, we held. Back over here, slight wick below, push back up. I understand we heavily dropped, but that's where I was telling you I'm focused on the bottom of this consolidation now. So there's a zone right here. If we use this zone with current price action, look where we currently are. That's what we're approaching. That's where, okay, we're pushing up heavy. When we came down heavy, we rocketed right back up. Came down, rocket, came down, rocket. What makes you think we're going to fly up to this and just straight up crash it on the upside? I truly think consolidation, maybe a bull flag on the larger time frames, it can pull back. My bad. I'm looking back at these questions. I see your question. Is it Addy 80? I'll get to that in a second. So I'm going to keep this red highlight. You understand now why I'm going to change this color to blue. This blue line is here because heavy hold, wick, shot up. It's a fake out level. What makes you think that if we break back inside and above this red highlight, that we're not going to hit this blue and possibly sell off heavy and then pop right back up? Or if we break above the blue, we could shoot right back to the downside. Fake people out to think, oh, we're about to rocket. Market makers know retail chases. I know retail chases. That's why I don't trade like retail. I know how retail is based off emotional standpoints. I got to get in before it's too late. I'm going off of what they react to, not what they react with. So as they sell, as we pull back, I'm thinking how a retail trader would buy into this. If we have a heavy sell-off, maybe they'll switch the puts. I'm looking for a dip buy. If we have a massive send on the upside, I'm looking for a rejection, because as retail chases, market makers, Wall Street, banks, whatever it may be that are in shares or whatever it could be for their position size, their portfolio, they're taking gains and selling it back down, knowing retail is probably chasing this. If we scare them out, we can sell them our shares, drop it. They're going to sell them out of fear. I have to sell before it's too late. They're going to buy it right back up. So I'm using basically reverse psychology based off how newer traders work. I'm thinking like a computer. Outside this blue level, which is around 73.27, where is the next level I'd be focused on? Like I was saying earlier, all this compression means nothing. All this stuff in here. I want to see a fill on the upside. When we break blue or contest it historically as support, we rocket, contest, rocket, contest, rocket. This is not going to be a little break above blue, hold, and slightly uptrend. This is going to have a huge price like movement interacting with it that will push this up. I'm going off historical analysis, not how I feel it's going to work. Historically, we come down to support, shoots up. We wick underneath, shoots right back up. When we do break underneath and hold, that's what this red is for, which we have not broken in the current times, as you guys can see. So using the next level, we have 73.27. I'm looking for the next major level. Could it be up here where I just put this next blue at? Could it be the yellow I already had? Could it be a little bit lower where all these wicks are at? That's where I tell you guys, no trader sees the same thing. For me, I like to be cautious, so I'll add extra levels if I have to. I know for a fact all these wicks in this area are like heavy. It's not a pinpoint. We have $76 a share. If we raise up to 76.30, it's not really a pinpoint. It's a zone. So do I want to risk putting a level there, or do I want to highlight this just to have a visual? There are a lot of wicks up here. So I can just slide this over now. I want to have an idea. I don't want to have like a hope. Oh, if we touch yellow, we're going to reject heavy. What do we have to get through first to get to that yellow point? So looking at this, we have, like I said, the 73.27 was massive. And if you want, I can highlight these just to show you why I put it there exactly. Ignore all this compression stuff. Don't let this fool you. Don't worry about this. That's how I feel about it. If you think it matters, do your thing, but underneath is what matters. All this in between, it's just to like scare you, think, oh, we're coming down to blue. Historically, we have to get in calls. They're going to bing bong this up, down, chop it, decompress just to send it back up. Focus on the little things that hold longer and show strength. Focus on the liquidity graphs that shoot right back up to the upside. When using that method on the top, you can put a level right here where this yellow highlight is. When using that, pull up, reject. Now we have this middle level. Rejections around as well. And I'm trying not to put too many highlights, so let me just move these bottom ones up to make it less airy. Notice these wicks. Notice the bounces on the sell-offs. I understand it's like, well, how do you know when all this stuff is like higher, it's lower? That's the part that every trader sees different. Everyone has an idea, and Rob just said 71, a key psych level, psychological levels. He beat me to it. Focus on the price action where I put these yellow highlights. It's roughly around $75 a share. When thinking from a numerical perspective, 74.38. That sounds kind of wishy-washy. 75. Okay, that sounds like a whole number. That's something that grabs people's attention. Notice the wicks. Yes, they're slightly above, slightly below, but everything flows in that zone. 75, 77, whatever it could be, 76. It's whole numbers. It's never going to be that way with every stock with psychological whole numbers by the 50 cent with share price. But think about that as you chart. If we look at this red highlight, it's roughly around $72, $71 for the wicks. I'm not saying it's a coincidence. I'm just throwing that out there to think about. Everyone looks at stuff different. Some say that doesn't matter, but it also flows in the idea of contracts. When you're buying contracts, most people don't get 73, 72, 74. They want the whole numbers. If a stock's at, say, 68, 68.5, most people gravitate to 70. If they add time to the contract, $75, $80 contract. Use that with the price action. Notice how the wicks on a lot of stocks, they hit for a specific reason. It's not just, oh, it historically hit that level multiple times. If I zoom out on PayPal, I'm pretty sure we can find some more ideas with those levels that are pretty key. I mean, if we look around this area at the top here, roughly 88.5. And I'm pretty sure PayPal, I don't know if at the time or now, but like 50.5, 51, 51.5. Some stocks go by 50 cents for the contracts. Others go by whole numbers, others $2.50. Think about the correlation outside of just charting and looking at stuff. All of this from a visual with no levels, no nothing. And I'm going to delete all this stuff once again. People just say, wow, this is a lot of chop. We're approaching the bottom. Where inside this are key levels? If we do break above this yellow highlight, where is a rejection possibly going to be? That's when I come into play with, okay, boom, boom, and then the top, obviously, if you want to use that, which I also put in as the highlight when I talked about this earlier. I'm always focused on main levels. I don't want to do all this like, oh, we had a rejection right there. Oh, we had a rejection right here, another one right here. It blinds me from what I want to see the bigger picture happen. And I've learned that for myself. I'm not saying that's like the right thing to do. And Rob just said they get the 5s and the 0s, and I mainly only use this on indices, literally. Ange said, how do you know? Institutions like to buy millions of shares around even numbers. Ange, think from a psychological standpoint. So many big people, it's so much like, this is how I think. I'm not saying it's true or it's logical. Looking at like this financial standpoint, whole numbers reduce headaches with paperwork. The idea of, oh, I bought, say, 1,001 shares. They stick to whole numbers a lot of the time. Contracts, price action, levels. I never believed that stuff until I actually started to correlate it with a lot. price action opening up on the day, closes on the day a certain amount. A lot of stuff flows very, very nice. And you don't realize it because it's kind of like it's too good to be true. I mean, charting like I just did with PayPal, you show this to a new trader, it's like it's too easy. It can't be that easy. It's literally patience. Patience is not easy. Having no emotions is not easy. So when I show people stuff like this, it's very simple. It makes it like there's no way it's going to be this simple. Trading is not hard to do when you think from a natural, logical standpoint. No emotions, no money that you want to make, and you force stuff. That's when waiting for the setups comes into play. You're not trading green candles. Oh, it's pushing. I got to get in. You're focused on these zones. I mean, think about it. If you just waited for zones to play out, catch the pullback. I guarantee if PayPal has a pullback, it's going to bounce around this area. I'm not saying dead on with the yellow highlight, but this red highlight I just put in, I guarantee PayPal will have a bounce around here if we pull back. It could come lower. Anywhere in this area is a logical bounce. And if you look at the price, just under 70 bucks, just above 69.50, just above the yellow highlight of $69 a share. A lot of this stuff is really interesting to me. And I'm not saying it works with everything, but it's nice to really put that into consideration. Millie said, do you use only 2 hours to see the key levels? So I use basically every level. It all just depends on historical analysis. I've talked to you guys about charting. I love to start on the daily, and I'm actually gonna, let me switch over to SPY real quick. No, someone said, what was the stock you guys said? PayPal and, oh, someone said some chart earlier. AVGO. I'll use that because it moves very, very fast. So I'm going to speed up through this a little bit because we have about 20 minutes left. But I want you guys to see something. AVGO is a perfect example of patience and just waiting. Trends holding. Same setup as PayPal. We had a bottom. Higher low, higher low. Look where we currently are. Resistance. Yes, it's a lot of like, it's between $890 a share and $875. $5 gap, that's a lot. I get it. But focus on why would you want to buy calls right now? Knowing in this area we potentially reject. If I was trying to play from a smart perspective, and currently I'm on the 2 hour, that's because I see the pattern on the 2 hour. I'll zoom out in a second. Logically, I'd want to wait for a pullback. Think about the idea of having a fourth bounce off a trend line. Price action squeezing. If you want to pull this down, be my guest, but I'm just using the current area. You shouldn't chart like this with trends, but I'm just giving you a visual. We are squeezing on price action. Higher lows, currently lower highs. We broke out above the previous lower high, but look where that trend approaches if we wait for a pullback. Right at this fourth trend for higher lows. We broke this trend, and this is where I'm going to take it down to a smaller frame, just so I don't clog up the charting. Look for a pullback off this trend right here. If you buy in, and Ange, we actually have a level here at 865, which is kind of crazy if you think about it. Oh my gosh, it lines up with the lower high off this trend that currently broke on the upside, could pull back. We have a level here. Isn't that coincidental? Coincidental. If we fail to bounce off this trend, we have another reason to hold if we break under. If you can afford to hold, we have another trend of higher lows. There's a lot of evidence as to why strength will hold if we pull back. And if it does sell off, that's when you have to readjust. Do you want your trend to be a break from the previous higher low? That's when a lot of like self-discipline comes in. Can you hold red? Did you size light? Are you just buying the breakout and recontest? Say the top breaks and you catch the pullback. You decide what you're doing. You're deciding the plan. And said, check the 3 minute. I don't look at the 3 minute, but I'll pull it down to around that level. Let me see if this does the 1. Let's do the 5. Let's do the 5 minute, Ange. Let me make this look. There we go. That's better. So going off this, that level we have was this heavy support. We broke underneath, broke above. We held. Look what happened at open today. Heavy sell-off, bounced right off this historical support level. Isn't it crazy how that works? Is that a coincidence? Is it just a natural response? Are algos selling off just to buy back in because they know retail's looking at the 1 minute and they probably got scared out when this sold off at open, only for the market makers, Wall Street to buy right in, send the price flying. Every level has a reason. There's no such thing as, oh, I'm going to use this level today and that's it. And I see Ants just posted a picture. Let me peep this. Yeah, you have the same thing, bro. Same thing. This sell-off on the 1 minute, retail doesn't see why this bounced here. But if you zoom out just a little bit, and Millie, this is when it comes into play. It doesn't have to be the hourly, the 30-minute, the 15-minute. You just want to know why a level is where it's at. We held support here. I'm going to move this yellow down. Held support. Broke down underneath. Held support here. Could this level be in play if we pull back on the downside? Notice how this yellow highlight played out perfect today on a fake quote unquote or selling off. Broadcom is going to sell off. We bounce right off that level. That's when conviction comes into play. Do you trust your charting to enter a position light and let the chart work its way out? If you entered light, say one contract, this bounced almost $20 a share from the low to the high of the day. And this is on a breakout potential. If we zoom out a little bit more to the 1 hour chart, heavy resistance coming up. If you chase this now, you're risking an emotional trade. What if we reject and pull back down? If I miss a trade like this off a heavy support, I want to catch the pullback, or I want to catch a breakout and a recontest. I only put myself in a position to let a chart work its way out, and I'm not freaking out over red or green. Ange said 844.93 is a strong level. If you round that up, Ange, 84.5, 845. And that is a very, very, that's where I put the red highlight. Okay, that's perfect. Psychological numbers, whole numbers. iPhone said support at 856, 857. So let's pull that down. Yes, historical rejection. Look at that. It's not as strong, but you see the wicks happen. If we take this down to the smaller frames again, and Millie, just like earlier, it doesn't have to be a specific time frame. You just want to have a visual as to why you put a level there. And I have a lot of stuff going on, so let me delete all this real quick, and we're going to start fresh. Level right here at 857, 856 area. Rejection. Rejection. Pullback. Yes, it was pre-market. Yes, we didn't touch all the way, but that was still holding pre-market. But also look at the midday right here. Quick sell-off and a heavy wick. Shot right up. Intraday here. Push on the upside, rejected. This level is going to play a role if we sell off again on AVGO. And if we take that 857 level and go back to the hourly chart, this is when I love charting because it's like a game. It's like a systematic game. Look at the trend mixed with this level and this lower high based off this trend bounce. This is a lot of strength if we pull back. We have a level. We have a trend that broke out from lower highs that could recontest this trend. If you don't understand how trends work, when we have a lower high like this, majority of the time when a price breaks out, we tend to recontest the trend line and then we send off of it. Why would you have emotions if you entered on the second arrow, and I'll make this green. Say you enter on this green arrow at the recontest of the falling trend. If you entered at the high on the first arrow and we pulled back, you'd probably be freaking out. That's an emotional standpoint. You're freaking out because you knew I should have waited, or maybe you rushed a trade and you just don't know what to do now. You have to avoid buying a breakout, buying the hype. Retail chases what they see, not what they want. People see a breakout, I got to get in before it's too late. Stick to what you know is best. If a pullback happens, look what we're pulling back to. We have a heavy level at 857. We also have higher lows on an uptrend. We also are recontesting the up break on a lower high trend. We have 3 reasons for strength here if AVGO pulls back. If we break all those levels, we have this support down here at roughly 845. Like, you guys see how this is working. It's a game. It's a level game. Level 1, level 2. If we break out of level 2, let's catch the pullback to level 2. If we break level 2 on the downside, let's look at level 1 again. It's all about like working through the process, not joining midway through, hoping it continues. Everything has a pullback. I truly believe that. And if it doesn't pull back, eventually it's going to. If we break out, like I said earlier, we logically should pull back to this high right here. It's just how it works. It puts less emotional stress on you as a trader if you enter on the second arrow back down, because logically we rejected. Now we should hold if we break out and pull back to that. So I'm going to switch over to SPY to end this for you guys. Yeah, I'm going to cover CPI with the SPY chart that I'm about to pull up right now. Don't worry. And just so you guys know, I'm speaking off of what I personally think will happen. I'm not entering off of what I'm about to say. I'm always speaking from a logical standpoint. I'm never going to talk like, oh, this is going to happen. Oh, this is definitely going to reject. Oh, this is going to send tomorrow. I'm talking based off what I am waiting for and not expecting and chasing. So let me zoom out enough just to see. So I'm on the daily chart just to give you guys a bigger picture real quick. Let me go over some questions real quick. Can you check Baba? If I have time, I will definitely look at Baba. Are we looking for the wicks and rejections? Yes. So Millie, when you're looking for calls, and I can use SPY as a good example right here. So I'm on the daily chart, obviously. We have a rejection at the top. The top of these wicks is a rejection on the daily. As we approach, we pull back. What are the pullbacks doing? Are the pullbacks making higher lows? Are the pullbacks making lower highs? Let me delete this level. That's kind of confusing. There we go. Oh my gosh, what are you doing? Stop popping up. There we go. Are we making lower highs as we make recontests? You always want to build off of what you see and not imagine, oh, we're going to break out this time. If we break out, catch a recontest. If we don't break out, are we making higher lows on the trends? What is price action doing? What is it leading to? What is it trying to tell you? Don't just try and read what you can't read. Act like this is a foreign language. You're not trying to just like nick and pick what's really happening with this setup. You're letting it form and you're going off of price action and the reactions to resistance is touching again. Is it going to reject? Oh, we're back to a heavy support. Are we going to hold this support again? So it's more so candles you're watching, zones you're watching. And I see Mr. Trade is already saying what I'm going to be talking about to you guys. So let me zoom out and try and get through this pretty quick, because I do want to look at Baba with you guys. I want to give you guys what you want. So right away, when you're looking at SPY on the daily, I'm on the daily just so we can see all this. I'm not here because I love the daily. I just want you guys to see what I'm about to do on the bigger picture. And then when I come down to the smaller frames, I can talk to you about the current price action. So looking at SPY right now, this level, it's not a pinpoint. I'm just putting it here in this area. Heavy rejection, which at the time was all-time highs. We pulled back, we shot right back up. What do I tell you guys about breakouts happen, wait for the pullback? Look what happened. Right back to that support. Yes, it wasn't a pinpoint to the decimal bounce, but the zone held. Historical resistance is now acting as support. And honestly, a double bottom. As these double bottoms formed, we made higher highs very slightly. So price action is gaining volume buying volume, and we pull back. Once we broke underneath this level, which is roughly 452, now it's back as if we recontest that level, it should act as a resistance. Look at the resistance. Yes, we shot above a few, but what do you think that does to retail? Oh, we broke above the level. That was a heavy rejection. I have to go to calls now. It's a fake out. It's a wick. It's not going to hold. If it does hold, wait for the recontest and then buy calls. Don't buy calls on the break, because if it doesn't continue, you're going to get wrecked. I mean, look at these two candles on the daily right here. We gapped up overnight on this green. The very next day, straight down, straight down, straight down. Try to push back up, straight down again. Same thing as the next time. Heavy gap up overnight. Next two candles, red, red, next candle, red. Tried to hold, wasn't enough. Always, at least for me, I'm speaking on what I do, always wait for an indication to get into a position. If you want to just assume, oh, we're back above, we're going to send, be my guest. But always realize the risk that will come with it. So using these levels, I'm going to take this down to there should be the hourly. Yeah, the 2 hour. So I'm zooming back out. We have this blue level now. Coincidence? Maybe. For me, we've seen CPI, we've seen FOMC. Before I keep talking, Ange is asking a question real quick. Okay, so SP already said what I am expecting. So Rob said it's trying to tell me that when we reject here, I can buy puts for August. Let me get into this real quick. You guys are kind of thinking ahead. So Ange said a question. Let's say there is an IMP economic event coming up like FOMC, and usually the cons are very juiced up. What if someone buys some cons and our money on the juiced up cons? And how would those Greeks and IV affect those contracts? So usually this is not an accurate statement. This is how I personally feel. When contracts are juiced up, it's because they know, okay, economic event, FOMC, CPI, PPI, whatever it may be, earnings report for a stock. Everyone knows those get juiced when there's earnings coming up. They do that because they know people want to catch the big move. They want to catch it. They want to make easy money. So people have to buy farther out of the money. Think about it. If you can't afford at the money, what are you doing? Okay, how far out can I go to make this contract fit my portfolio? They juice the contracts. They spread everything out more. So you have to buy farther out. If the move happens, you're not making as much money, even though the move happened. Contracts are juiced. After the news event, all that IV gets released. Everything's back to normal. So if that move doesn't hit properly, you're not making money. And they know that because to make the juice heavier, contracts are more expensive. You have to play farther out of the money, or you risk sizing heavier at the money. Using that to how I portray the idea of it, it basically puts you in a position of hope. I hope this move is going to have this move because I had to force a play farther out than I usually want to. Why are you playing that position then? A lot of people try and buy in before the IV hits. That's fine, but realize it may not go in your favor. A lot of the time when you buy a position with time, consolidation, pullbacks, whatever it may be, it kills the premium. So when I play events like this, and going off what Ange was asking with the question, I usually wait for the effect afterwards. When I can see a clear view as to what's going on with a chart and a setup, it gives me conviction. Also, the IV is back to normal. Contracts are usually not as juiced after the reports are released. People get freaked out and they usually double down. They sell. They don't know what to do and they just hold their contract. I'm going off the reaction to retail, not what their hopes and their plan of, I'm going to buy in because this is going to happen. I love playing reactions. So going off that statement, focus on this level right here, 452. I'm not saying we're going to push the 452. It could, but I'm not saying it will. We've seen historical movements on SPY and a lot of other stocks have these wicks. Could these wicks play into effect? If I put a level right here, you guys should easily see the correlation with this. The wicks on the downside. Let me change the color of this line so I can just state colors. Let's go yellow. So it's yellow level. Pulling these down a little bit. Notice how before these breakouts happened, all these wicks that happened after all-time highs were approaching, they had a reason. People knew, aka market makers, the previous all-time high is going to be retail's, this is the bounce if we come down. You really think they're going to bounce it dead on with the previous all-time high. They're going to have a few fake outs on the way to get retail thinking, oh, this level is going to hold if it comes back down. Notice this slight retraction. After we broke the all-time high, the previous all-time high, pullback, basically right at that level. Retail sees that, okay, this level is holding based off the previous. I missed it, so if we pull back again, I want to get in. You really think retail bought calls on this, or they thought, oh, we're going to sell off. We broke below, push back, sell off again. I got to get puts before it's too late. Send it right back up. Same thing happened here. Wick down, right back up. So using these wicks, I'm basically thinking That is what's going to happen with a push off CPI. Do I think it's an actual bull run? Personally, no. It could be a wrong analysis, but look at the actual price of what this level's at right now. 450.21. Like I've said, it's not dead on with 450, but literally Mr. Trades just said that. 450. Look at the wicks that happened before major sell-offs. Wick, sell-off, push. Once we broke above, sell-off right back to that level, push back up. Once we broke underneath, recontest, sell off again. Once we sold off again, push to the upside, rejected again, 450. I truly think we're going to break above 450, not on CPI tomorrow, but Thursday or Friday. And it's going to trick people into thinking we're going to send to all-time highs. We're going to break on the upside and look strong into whatever day, whatever month, whatever it could be. I truly think we're going to be in a bull trap. The setup is too good to be true. Higher lows, squeezing on price action. The only thing that CPI can do is either drop us down to support, which will be roughly around this area, I feel. And we'll push back up only to reject and make lower highs based off this price action now. There's multiple ways I think about this. I'm not prepared for one way. I go off the reaction, not the initial move. If CPI sends us to the upside, this is what I plan on happening. Wick above 450. Why wick above 450? It's too obvious. It's not obvious. Retail wants to see a psychological number break to chase calls or size up or roll up their position. If we break 450, everyone's going to be saying, oh, 450 broke. We're going to go higher. 450 broke. They're going to wick it and send it right back down. And if we do come down, we're going to have a bounce level. Historical resistance will act as support. I truly think we're going to pull back, make another initial push to the upside before we have what I think is going to be the flush back to 430, 420, whatever you want to say. Not saying this is what will happen, but I'm prepared for this. If I don't play the move, I'm not upset. If we consolidate and don't move at all, guess what? I didn't waste my time emotionally forcing a play based off this has to go. I have to play CPI. So Rob just said puts for August. I would not size in for that, but expect puts to happen. Don't force trades based off, I got to get in now before it's too late. We could, where's my mouse at? What's going on? There we go. I'm not saying we're going to sell off. I'm going off what happens. I'm playing the reaction. If we push to 450, which I truly think we are going to touch 450, if not 44.8, 44.7, we're going to push. Retail needs one last trap before market makers sell it off. I truly believe that. Will it happen? I don't know. Hypothetical. I'm not playing that hypothetical. I'm preparing for it. If we push, I'm looking for puts. If we sell off, I'm looking for calls based off a level system, not just, oh, we're dropping, I got to get calls. Where are we bouncing off of? I'm going to delete all these levels again one last time, and then I'll take last questions from you guys. I'm using levels like a level system, level 1, level 2, level 3, whatever you want to call it. As we break these levels, and I hope you guys realize I don't need to see where these levels are now. 450, 452. I don't need to go back anymore. It's stuck in my head. I know why they're there. We have 3 main levels. Could we slightly just come up here, triple top, send right back down? We start squeezing again, yada, yada, yada. I'm prepared for whatever happens because I'm going off level reactions, not going, oh, we're breaking this level, I got to get calls. I'll wait for a rejection if it happens. If we never reject and keep pushing, I'll just catch the pullback. If we don't pull back, I wait. It's that simple. Okay. Let me check all the stuff you guys were saying. What I mean is not taking a directional trade, making money on the juiced up cons. So yeah, if you make money on juiced up cons, you'll make money. But say non-juice contracts, you make 50%. Juice contracts, you make 50%. Those juiced contracts need to move way heavier based off the stock price action. When contracts are juiced, they don't move as good with percent gains for the actual premiums. So you can't expect SPX to move, or let's say SPY moves $2 in a day on juice contracts. That won't give you the same return as SPY moving, say, $2 a day last Thursday. It's all about like the time of a release coming up. They do this for a purpose. A move is going to come based off CPI. So they make the contracts juice so that people don't value and gain off of that move that is going to happen. Because if you straddle on a low juice contract, you're going to make money either way. That's going to outweigh the loss on the wrong position. So they do this for a reason. I don't know why, but I assume it's so that people can't just win no matter what happens. Say you see it start playing out like you just described, what date would you look at? So if I'm looking at, let's just say SPY, because I do like SPX, but I will not play juiced up contracts. If I'm looking at SPY, I'm going based off how fast did the move happen to the upside? How heavy was the rejection on the level I wanted? It's either I'm looking to get puts at 450 area, or I'm looking for a pullback to see how we react to this level. I'm not going in the moment. I try and prepare, but if I see us push right away to 450, I'm not going to buy puts out of nowhere, because are we really going to reject that heavy? Yes, it's possible, but I don't want to put myself in that predicament. If we slightly uptrend tomorrow, Thursday and Friday up to 450, I will add time, because logically it took 3 days to push up. We could sell off massive, but I'm not trading for the money. I'm trading for the setup. Slow growth to reach a level can have a huge increase in volume buying pressure that may push it higher. So I don't want to risk zero DTE. Any position that I play, I always size light, and I want to catch the actual move. I'm not catching a 20-cent drop on a SPY for puts. I want to catch like that, the $10 push to the upside. I want to catch it back to the downside. So I'll play, say, 10 to 20 slots out, but I'm adding time, whether it's a month, a few months, whatever correlates with my usual position sizing. Everything comes down to like what you can afford, what you can manage to hold if you are wrong. Let me scroll down a little bit more. It's very hard to give advice on stuff like that because everyone trades different. That's the hardest part. Could we scalp some quick puts once it hits 449 to 450, go light, or would you rather not enter at all? If we race up to 450, I mean, any position you can enter, you just have to understand the risk. 450 is a major resistance, and 452 is also a major resistance. So the gap there, it's a $2 gap for the $10 push that may happen tomorrow or Thursday or Friday. So it's all up to you. Personally, I like to wait and see, because looking at previous price action, if I take this chart down to this should be the hourly, I think, 30-minute. When we push these heavy zones, notice how we push up, pull back. Next day, we have a slight retraction to the upside, but we make a lower high. This consolidation took about 3 days. So you have time to get in. There's no rush. If there is a rush, you're trading for the wrong reason. If we push, like say this day right here, say this type of move happens. I'm going to change this color so it's not annoying. This cayenne / light blue color. Say this move right here is a $10 push to the upside on 450, and then we drop off right away. I'm not going to enter right when we touch just because, oh, we push massive, we have to come down. I'll look for trends within the move, whether it be the 5-minute, the 15, the 30. I'm looking for levels within the push that rejected, that historically may have a reasoning. That's when I play off the reaction and not just going with hopeful this has to reject. It's very hard to describe, but I'm very patient. If I don't trade the rest of the week, I'm fine with that. Some people can't deal with the fact of not trading for the first 2 hours of open. I can sit here all day and not trade and be fine with that. Apologies, I'm relatively new to trading. What do you mean by juice contracts? SP said, hi IV. So the value of the cons are way more than they should be due to momentum. When juice contracts happen, they cost more and they don't move as fast percent gain wise. Juice contracts, the correlation is like, say I give you $5 and I'm like, go buy something from the gas station. And then the next day I'm like, okay, here's $5, but the store doubled all their prices on all their items. It's kind of the same correlation. You have the same premium strike price, the same movements on SPX, but the money is way higher and you're not getting as much value in return if the move happens in your favor. That's probably the best explanation I can give. You're so patient, I only get one play from you a week. Hey, the plays hit half the time. And if you guys want some math real quick, I'm gonna are there any more questions off of finding plays without emotion, whether it comes to trusting zones, waiting for setups, avoiding hype plays. Is there any questions at all before I stop this recording? I have more stuff I want to speak on, but it's kind of off topic, so I don't want to keep this recording going. Oh, Baba. I'll do Baba after we get through this. Any last minute questions? If not, just say we're good. Just give me a heads up. Okay, if you guys have questions, I'll answer it all favor.